not for profit making organization, lesson 8. When compared with profit making organization, sole proprietorships, partnership and company, those organization main purpose for generate profit, but not for profit making organization. Those are the records we have to prepare to provide information. First one, you have to prepare cash accounts, normal cash account, all the cash received amount available debit side, and all the cash payment available credit side. And membership fee accounts, that part we have discussed part 1, general members available, normal members, as well as life membership fee. Membership fee as well as life members we have discussed. That is a main income. And income statement you have to prepare to calculate surplus or deficits. Profit and loss should be calculated. You have to prepare income statement, income minus expense, as well as statement of financial position, and prepare the income statement to calculate result of external activities. If there is a restaurant, its profit and loss should be calculated separately. For that, you will prepare separate income statement for that. Those are the accounts and records you have to prepare under not for profit making organization. Receipts and payment account, it is equal cash books, normal cash accounts, and income statement we have to prepare to calculate profit and loss. Profit equal surplus, loss equal deficits in not for profit making organization. Reason main purpose is not for generate profit. If there is a profit, we have to write as a surplus. If there is a loss, we have to write as a deficit. Income minus expense. All the income should be included here. From that value should be deduct all the expense. Then can be calculate profit. If it is profit, surplus. If it is loss, deficits. Then think about donation. Donation receipts to the organization can be divided by two parts, general donation as well as special donation. If there is a general donation, those should be considered as income. But special donation, total value cannot be considered as income. Part of value should be considered as income. Balance part should be included under accumulated fund. You have to know how to record donation on the financial statement. General donation can be considered as income, under income here as a donation. But if it is given a special donation, part of value should be included under income as a donation, and balance part should be included in the statement of financial position under accumulated fund. Statement of financial position. Then think about joining fees, admission fees. You have to know how to disclose on the financial statement. In the organization point of view, it can be disclosed. There are two ways. In the organization point of view, normally admission fee, joining fee should be considered as income. Think about new members join every year. Therefore, in the organization point of view, admission fees, joining fees also can be seen every year. Therefore, admission fees or joining fees can be recognized as income. In the organization point of view, every year new members join. Therefore, admission fees also available every year. Therefore, in the business point of view, organization point of view, it can be considered as a income at once. But think about in the members point of view, they paid admission fee at the time of joining. Only one time. Not paid every day's joining fees. Therefore, total amount cannot be considered as income. Part of value should be considered as income. Balance part should be included under accumulated fund. The members' point of view, they paid only one time at the time of join. Not paid every year, every month joining fees. Therefore, total value cannot be considered as income. Part of value should be considered as income. Balance part should be included under accumulated fund. If it has not given clearly, joining fees can be considered as income. Sometimes it has given policy. Based on policy, part of value should be considered as income. Balance part should be included under accumulated fund. Then in the non-profit organization, not for profit making organization, there is no owners available, members available, not owners. Therefore, equity cannot be recognized in the not for profit making organization. Equity equal in this lesson accumulated fund. Therefore, equity assets minus liability. Think about accounting equation. Assets equal liability plus equity equal. That is accounting equation. Therefore, equity equal in this lesson accumulated fund. Therefore, assets minus liability can be calculated accumulated fund. Therefore, you have to prepare a statement for that. Assets minus liability can be calculated accumulated fund. It is equal to equity, but in this lesson cannot be used as equity. Reason, there is no owners, members available. If there are members, there is no equity. It is called accumulated fund. Only opening assets minus opening liability should be included. Then this is the way you have to prepare. This is the way you have to calculate accumulated fund. Think about this example. It has given opening balance 1st April 19, accrual electricity, liability, sport equipment. It has given net book value after deducting accumulated depreciation. And sport ground, pavilion, those assets, accumulated depreciation. If it has given cost value and accumulated depreciation separately, net book value should be included in the statement after deducting depreciation, net value. Then inventory also asset, fixed deposit assets, but creditors of the restaurant's liability, equipment of the restaurants and their accumulated depreciation is given. Think about net book value after deducting accumulated depreciation. And subscription receivable is assets. Subscription received in advance is a liability. Given opening balances, assets minus liability. Assets should be included here and minus liability equal accumulated fund. Record asset this side, then take total value, and liability here, take total value. If it has given cost and accumulated depreciation separately, net book value should be recorded after deducting accumulated depreciation. Think about equipment also after deducting accumulated depreciation. But it has sport equipment is given directly net book value. But equipment of restaurants it has given cost and accumulated depreciation separately. After deducting accumulated depreciation, net book value should be recorded. Therefore, opening balance should be includes opening assets minus opening liability. That is a accumulated fund. You have to know how to record admission fees, joining fees, as well as you have to know how to calculate accumulated fund. You have to prepare like this statement: assets minus liability. Only opening balance should be includes. Then think how to record donation, general donation as well as special donation. Then this is the way you have to prepare income statement. And this is the way you have to prepare cash accounts. And those are the normal account you have to prepare. Membership fee, already we have discussed part 1. And think about external activities also available. External activities. External activities. Think about this one. Sometimes think about main purpose of the not for profit making organization is not generate profit, but for collect money. Sometimes there is a canteen. Sometimes conduct sport festivals. Sometimes having a dancing and exhibition to calculate to collect money. Those are the external activities. Sometimes there is a canteen for generate cash. Main purpose is not for generate profit. If there are those kind of activities, its result should be calculated. The result of this event must be calculated separately. If there is restaurants, its profit and loss should be calculated separately. Its profit and loss. And think about donation part also. Think about donation part. Donation can be divided by two parts: general donation as well as special donation. Think about this part, very important. Donation, not for profit organization, often receives various type of donation. These donation can be classified into two categories: general donation as well as special donation. General donation are the ones. Think about this is where your records general donation. Cash account debit, general donation account credit. That value should be considered as income. But think about special donation. General donation are recorded as income for the current year. If the donation received for a specific purpose, it can be identified as a special donation. Think about, we can take example. Think about this example: motor vehicle value 20,000, 20 lakhs received as a donation. Motor vehicle received as a donation, special donation. Therefore, motor vehicle account debit, donation account credit. Assets not received in cash. Think about how it records. It has given think about proportionates. Portion of part of value should be considered as income. And balance part should be included under accumulated fund. Total value cannot be considered as income if it has given special donation. Motor vehicle received as a donation. Motor vehicle account debit, donation account credit, but total donation cannot be considered as income. Part of value should be considered as income. Again, donation account debit, income statement credit. Balance part should be included under accumulated fund. As given, the balance in the donation account must be shown below the accumulated fund. Therefore, there are two types of donation available: general donation as well as special donation. Then account fund we have discussed. An income statement, it is equal income and expense accounts, cash accounts, that part we have discussed. Therefore, those are things we have to prepare as accounts and records: cash accounts, income statement of the club. If there is a restaurant, its profit and loss should be calculated separately. And donation as well as join-in fees. Think about join-in fees also can be disclosed. There are two ways. First one, the organization point of view. Every year, new members join. Therefore, join-in fees also available every year. Therefore, total received amount can be considered as income at once. But in the members' point of view, they paid only one time. Therefore, total value cannot be considered as income. Part of value should be considered as income. Balance part should be included under accumulated fund. In the example, if it is not given clearly, total received amount should be considered as income. But if it is given policy, sometime it is given this much of value should be considered as income, like that. If it is given like that, balance part should be included under accumulated fund. Then think how to calculate accumulated fund. And think about this example also. You have to prepare a statement like this: assets minus liability. When we are going to record assets, if it is given cost and accumulated depreciation separately, from cost value deduct accumulated depreciation.